Your bank wants you to put that $10,000 in a savings account, earning 0.5% a year, while they turn around and make 8% with your money. Today, I'm going to show you the 5 best places to actually invest $10,000 in 2026 that can build real wealth. Let me paint you a picture. You finally have $10,000 saved up. It's sitting in your checking account right now. You know you should invest it. But where? You open your banking app and see those savings account offers. 0.5% annual return. Maybe 1% if you're lucky. You think, is this really the best I can do? Should I talk to a financial advisor? What if I lose it all in the stock market? So you do nothing. The money sits there. Inflation is running at 3.2% this year, which means your $10,000 is actually losing $320 in purchasing power every single year. And 73% of Americans with savings admit they have no real investment strategy. If that reality check just made you realize how much potential gain you're leaving on the table, hit that subscribe button and drop a like. Not because I need another subscriber to boost my ego, but because every week I break down exactly how to make your money work as hard as you do. I'm Noah, and this channel gives you the financial strategies that actually move the needle. But here's what changes everything. You don't need $100,000 to start building wealth. You don't need $50,000. With $10,000, you can build a diversified portfolio that has historically returned between 8% and 12% annually. And the 5 options I'm about to show you are not what your bank recommends, because they don't make money when you invest smart. Let me break down the 5 best investment options for your $10,000 in 2026. Option number 1, S&P 500 Index Fund. This is the foundation. The S&P 500 tracks the 500 largest companies in America: Apple, Microsoft, Amazon, Google, NVIDIA. When you buy an S&P 500 index fund, you own a piece of all of them. The average annual return over the last 30 years? 10.7%. Not 0.5%, not 1%, 10.7%. Here's why this matters. If you invest $10,000 in an S&P 500 index fund today, and it returns the historical average of 10.7%, in 10 years, you'll have $27,641. You didn't pick individual stocks. You didn't time the market. You just invested in the entire American economy. And the fees? Most S&P 500 index funds charge 0.03% to 0.1% per year. Compare that to actively managed funds charging 1% to 2%. Those fees eat your returns alive over time. The best part? You can start with as little as $1. Platforms like Vanguard, Fidelity, and Charles Schwab offer S&P 500 index funds with 0 minimum investment and near 0 fees. This is the boring investment that makes people rich. Option number 2, high-yield savings account or treasury bills for your emergency fund. Wait, didn't I just trash savings accounts? Yes, but here's the difference. You should not invest all $10,000 if you don't have an emergency fund. Financial rule number 1, 3 to 6 months of expenses in cash before you invest aggressively. Let's say your monthly expenses are $2,500. You need $7,500 to $15,000 in emergency savings. If you don't have that, take $5,000 of your $10,000 and put it in a high-yield savings account. Not your regular bank offering 0.5%. I'm talking about online banks like Marcus, Ally, or Wealthfront that are currently paying 4.5% to 5% APY in 2026. Or consider 3-month or 6-month Treasury bills. These are backed by the U.S. government, zero risk, and they're currently yielding around 4.8%. You can buy them directly through treasurydirect.gov with no fees. This is not about getting rich. This is about not going broke when your car breaks down or you lose your job. Once you have this foundation, then you invest the rest aggressively. Option number 3. Roth IRA maxed out. This is the secret weapon. A Roth IRA lets you invest up to $7,000 per year in 2026 if you're under 50. You pay taxes on the money now, but every dollar of growth, tax-free forever. You invest $7,000 today. It grows to $50,000 over 20 years. You withdraw all $50,000 tax-free in retirement. Compare that to a traditional 401k or brokerage account where you pay taxes on every dollar of gains. With a Roth IRA, the IRS never touches your investment growth again. Here's how to use it. Open a Roth IRA with Vanguard, Fidelity, or Charles Schwab. Contribute $7,000 of your $10,000. Then, inside the Roth IRA, buy an S&P 500 index fund or a total stock market index fund. You're combining two powerful strategies: tax-free growth and index fund returns. If you're 30 years old and you max out a Roth IRA every year until you're 65, contributing $7,000 annually with a 10% average return, you'll have $1.87 million. Tax-free. This is how regular people retire rich. Option number 4. Target date retirement fund. Maybe you don't want to think about investing. You don't want to rebalance. You don't want to pick funds. Fair enough. Target date funds do it for you. You pick a fund based on when you plan to retire. If you're planning to retire around 2055, you buy a Target 2055 fund. These funds automatically adjust as you get older. When you're young, they invest aggressively in stocks. As you approach retirement, they shift to bonds and safer assets. Vanguard's Target Retirement 2055 fund has returned an average of 11.3% over the last 10 years, and the fee? 0.08% per year. You invest your $10,000. The fund does everything: rebalances, adjusts risk, diversifies across thousands of stocks and bonds. This is the ultimate set-it-and-forget-it investment. If you hate managing money, this is your move. Option number 5. High-growth ETFs, or sector-specific funds. This is where you take calculated risk for higher reward. Not with all your money, but with a portion, maybe 20% of your $10,000. That's $2,000. You invest this in high-growth sectors that are exploding in 2026. Artificial intelligence, clean energy, cybersecurity, or semiconductors. ETFs like the Global X Robotics and AI ETF, the iShares Global Clean Energy ETF, or the VanEck Semiconductor ETF give you exposure to these industries. These are riskier, they're more volatile, but the growth potential is massive. The Semiconductor ETF returned 47% in 2023 alone. You're not betting on one company, you're betting on an entire industry that's growing fast. Here's the rule. Only invest money here that you can afford to see drop 20% or 30% in a bad year. But if you're young and have time, this is how you accelerate wealth building. Now let me show you the shift that happens when you actually invest instead of letting money sit. Before you invest, you check your bank account obsessively. You see the same number every month. Maybe it grows a little, maybe it shrinks. You feel stuck. You're working hard, but your money isn't. You think, will I ever actually build wealth? You see people buying houses, retiring early, traveling, and you wonder how they did it. After you invest, everything changes. You stop obsessing over your checking account balance. You start checking your investment account, and you see it grow. Not just from what you add, but from returns. Your money is making money. Month 1, you're up $127. Month 6, you're up $890. Year 3, you've made $4,200 in gains without lifting a finger. You start thinking differently. You see opportunities everywhere. You realize, I don't need to work until I'm 75. You start planning. Early retirement becomes possible. Financial independence becomes real. That's the mental shift. Your money becomes a tool, not just a number. Let me give you a real example. Let's say 2 people each have $10,000 in January 2026. Person A leaves it in a regular savings account earning 0.5% per year. Person B invests it, $5,000 in an S&P 500 index fund, $3,000 in a Roth IRA invested in a total market fund, and $2,000 in a high-yield savings account for emergencies. 10 years later, in 2036, Person A has $10,512. They made $512 in interest. But inflation averaged 3% per year, so their purchasing power actually went down. Person B, their $5,000 in the S&P 500 grew to $12,969 at a 10% average return. Their $3,000 in the Roth IRA grew to $7,781. Their $2,000 in the high-yield savings stayed around $2,000, but protected them from emergencies. Total for Person B, $22,750. They more than doubled their money. Same starting point, completely different outcome. So how do you actually do this? I know it feels overwhelming. You might be thinking, what if I mess this up? What if I choose the wrong platform? Let me break it down into simple steps. Step 1. Open a brokerage account. Go to Vanguard, Fidelity, or Charles Schwab. All 3 are excellent. It takes 10 minutes. You'll need your social security number, bank info, and ID. That's it. Step 2. Decide your split. Use the 70-20-10 rule as a starting point. 70% in index funds like the S&P 500, 20% in bonds or high-yield savings for stability, 10% in higher-risk growth investments. Adjust based on your age and risk tolerance. Step 3. Set up automatic investments. Don't rely on willpower. Automate it. Transfer $100, $200, or $500 every month from your checking to your investment account. This is how you build wealth on autopilot. Step 4. Don't panic sell. The market will drop. It always does. In 2022, the S&P 500 dropped 18%. People who panicked and sold locked in losses. People who held or kept buying, they're up big in 2024 and 2025. Time in the market beats timing the market. Every single time. Step 5. Increase contributions every year. Got a raise? Invest half of it. Got a bonus? Invest 75% of it. The fastest way to wealth is increasing how much you invest, not chasing the perfect stock. In 10 years, you'll have over $20,000. In 20 years, you'll have over $67,000. And that's just from a one-time $10,000 investment. If you keep adding even $200 a month, you'll have over $150,000 in 20 years. Banks make billions convincing you that investing is complicated, that you need an advisor, that you should just leave your money with them earning 0.5% while they invest it and make 8%. Every dollar you invest is a dollar they don't control. Every smart investment decision you make is profit they don't take from you. Your money, your control, your future. If this video just showed you exactly where to put your money to actually build wealth, hit subscribe and turn on notifications. Every single week, I drop a new video breaking down the moves that actually grow your net worth. Drop a comment right now. How much are you planning to invest this year? Be honest. $1,000? $5,000? $10,000? I read every comment and I'll reply with specific advice for your situation. I'm Noah. Make your money work harder than you do.